this is Christina Season with Sisonhomes. I'm here with Elliot.
Hey.
And of course, you've heard about we're discussing about as a CPA, the accounting hacks you can have that our clients can learn from, and what are the benefits of owning a home versus renting. And so I wanted to ask Elliot, what are the ways, because we have a lot of business owners out there, and as you know, business owners, they want to deduct everything, right? And so the question is, when they go to their accountant, the accountant will say, oh, you know, they can afford an $800,000 house, but they go and say, Christina, I can only qualify for $400,000 because I don't have, my income is not supporting it. So what are the ways that you can help out advising on these clients to be able to afford their house? So, you know, give me a scenario and how we can do that.
Yeah, definitely. So you got small businesses, different types of business owners, and that allows people to deduct their business expenses, as opposed to someone that has a W-2 or a salaried employee. There's no business expenses to deduct. So the business owners are in their kind of own world, and there's some benefits to that. And part of it is being able to adjust the numbers to show the income that people
depending on that year when they file, correct?
Yeah, exactly.
Yeah.
So it's annual, and then depending on what their goal is for homeownership, the bank is going to ask for their tax return. They're going to show this amount of income, and then the mortgage will approve them based on
that income.
Yeah, based on that income.
So I've seen a lot of really good businesses, and they say, see, they only qualify for 300. So how is that? So they can adjust it according to how much they can qualify or based on their income for that specific year, correct? Or is there another way that they can qualify based on? Okay, that's a mortgage question though, but based on other things, what advice can you give business owners out there that need to, you know, buy a house right now and they cannot qualify for that mortgage?
So it's going to be a combination of both. There's probably some capital that's saved up. Possibly there's the Roth IRA or a couple of these other retirement accounts that they might have been saving into that you can withdraw the funds for.
So you can withdraw up to 50% of the funds, right?
Yeah, you can depending on the situation, you can withdraw the funds from those types of saving accounts without incurring a penalty. And then you've got your income from your business. So you've got multiple sources of income. You've got the your capital that you're building up, the annual income that you're getting paid every month, and then you also possibly have retirement account savings that you can use for homeownership.
That's great.
So it's more just being aware of these different types of investment vehicles, and then the flexibility that they have for homeownership.
Yeah, that's great. And what struck me is that for for single people out there, even married couples who just want to rent, you're not taking advantage of the tax benefits that's out there. I mean, on a typical, you know, maybe $300,000 property or $400,000 property, that's equivalent to about maybe $1,800 to $2,400 a month in mortgage payments. You have a fixed mortgage payment, so your rent wouldn't increase. You have a set budget that you're working with. At the same time, you can also have all those deductions. Imagine deducting the mortgage interest that you pay, the real estate taxes that you pay. That's going to be all as tax deduction. Is it like straight up? How do you do it? Like, for example, if I have $100,000 in income, will that be a straight deduction?
Yeah, in the case of itemizing the deductions, like we talked about, in addition to charitable contributions, medical expenses as well, all those expenses and deductions will offset your ordinary income, your W-2 wages salary. So that's going to be, as the expenses increase, the income's going to decrease, and your refund is going to increase.
Yeah. So with your personal experience, with you undergoing that journey, you were able to save at least $5,000 to $10,000, right? In terms when you were at that particular time.
Yeah.
When you were buying a 300 to 400,000 property, correct?
Yeah, definitely. So there's definitely going to be a savings element to purchasing your home, however that looks like. And then, yeah, that's just going to be one resource that you can use as a down payment to buy your first home.
Oh, that's awesome. With that, I'd like to thank Elliot. Elliot, thank you for
Yeah, thank
joining
you.
us.
Yeah.
And, you know, please follow our website, sisonhomes.com, and our Instagram, sisonhomes, and we'd like to share you value-added information to make sure you have an informed decision. Thank you.
Yeah, thank you.
Okay, bye.